Hello and welcome to The Trade. We're coming at you from our studios here in Barangaroo, of course, and I am Kyle Rodder. Well, let's get to my guest today because it's the first time we're speaking to him in 2023, so I'm really interested in his insights. Jason McIntosh from Motion Trader, great to have your company today. Now, we've got a few charts to get through. Let's start with sort of, I guess, a general market chat too, though, because, well, it seems in a way a lot has, well, possibly changed since we last spoke.
Yeah, hey Kyle, it's great to be back on. First appearance in what about 4 weeks, and look, there's been a bit of movement in the market over that time. It's always this fascinating multi-dimensional jigsaw puzzle where we're trying to put together, and that certainly hasn't changed as we've come into January. So I've got a stack of charts today to go through. So hopefully some interesting things for the viewers to ponder and get their heads around as we move into January.
Yeah, absolutely, and perhaps a little bit timely as well, or reasonably timely too, because we'll start with the S&P 500 quite naturally. Bit of a sell-off last night, and perhaps has respected that trend line that we've been, watching obviously for almost what feels like months now. But just looking at what you've, I suppose, developed here, potentially signs of an imminent reversal. What are you seeing?
Oh, look, I think this is a fascinating chart, Kyle. It's we've got two competing patterns which seem to be taking shape at the moment. So the first one's bearish, and the other is potentially bullish. So starting on the bearish side, well, of course, we've got that trend line. It's been the dominant focus over the last, going back to January, that's where the trend line begins from. It's not the perfect fit anymore. We had that excursion above it about a month ago on a CPI release, but I think it's still an excellent guide to the underlying trend of the market. As you noted, it has pulled back a little bit over the last 24 hours. So the market there are a lot of eyes on this trend line. So it's I would expect it's going to continue to be a good guide as to where things are. The other pattern is potentially an inverse head and shoulders pattern. So head and shoulders are a reversal pattern, and I've marked it out on the chart. You can see those blue cup shapes beneath the index. So on the left hand side we have the left shoulder of the pattern. In the middle we've got the head, and then on the right, the most recent price action is potentially tracing out the right shoulder. And it's interesting to think about how these patterns form. So the market will make a new low and form the head of the pattern, and then it will rally, and people assume, well, look, it's just another bear market rally. We know the drill. This has been what's been going on for months and months. And then the market will start to roll over again, and people will often assume, well, okay, well, here we go again. We're going down to a new low. But what can happen if we don't see follow-through selling and the new low doesn't eventuate, well, then that's a sign that selling pressure has dried up, and it sets the stage for the reversal. So the question is, where are we now? Well, the S&P, it could still be forming out that right shoulder. What would be really interesting would be if the market tries to sell off over the next week or two, coming down off that trend line, which it started to come off last night. But if it can't get that follow-through selling and really accelerate lower, then that sets the stage for maybe having another punch at getting through this trend line. It's another thing which is interesting is that the S&P 500 has been range-bound pretty much for a couple of months now. So just look back over this chart, look back to the start of that trend line, and you see that every time the market's got up to the trend line, it doesn't stay there for long. It reacts lower and starts tumbling again. This is the first time it's actually hung around for a while. So I'm open to the possibility that the market tries to kick higher into the next couple of months. So I've got a long S&P 500 position, not a huge position, but nonetheless it's a long. I'm long local stocks. But having said that, I've also got a cash reserve. I've got a strategy in the event that the market turns and breaks lower. And I think that's really important. I think it's really important to if you want to play the long side, you've got to have your escape route in case it doesn't play out. I'll tell you another thing which has been fascinating over the last week is that what I do each week, I put my YouTube market outlook up each weekend. And I mentioned this scenario about the head and shoulders. what was fascinating to me is that I got so many comments from people telling me that I was wrong, telling me that, don't I know the Fed's hiking? Don't I know there's a recession coming? Don't I know there's quantitative tightening? Don't I know earnings are going to be awful? Don't I know, etc. And it same appears across Twitter when I see other people who mention potentially not necessarily a new bull market, but anything slightly positive. They get overrun by the people telling them what will happen. And it just interests me because markets just aren't that obvious and they don't always do what we expect. So all I say is just keep an open mind. Don't get boxed into one camp or another and be guided by the price action. Stay open-minded because the unexpected, in this case a rally, sometimes can happen.
Yeah, without a doubt. I've heard of traders who say when most people are disagreeing with them on a particular trade, they know they're onto the winner because they know exactly who they're going to be out buying or selling into. But we digress, obviously, or I digress. Let's get to the other major US index that we obviously want to follow and keep an eye on, which is the NASDAQ, because we have seen something of a turnaround in tech stocks recently. Obviously, the macro factors there are pretty well known. But what are you seeing on the charts there when it comes to effectively US tech stocks?
Yeah, look, NASDAQ's been the weakest of the US indices. It still doesn't look appealing. It's below the moving averages. The moving averages are trending lower. It hasn't been able to break above resistance at 11,600, which you can see that blue shaded band on the chart. So for me, it's not a buy, and it does make me nervous. I look at this chart and I could see a scenario where you get that waterfall pattern where it just peels away and collapses. So that's why I say with that S&P scenario which I painted, I very much do have a line of retreat. It's not about saying, the market's got to go up, because the market doesn't have to do anything. And but also I'd look at this chart and you can see a different scenario there as well. So you can see those two green converging trend lines. That's potentially a bullish wedging formation, which is a reversal pattern. It has to break high for the pattern to actually trigger, and that may not happen, but you can see the possibility of that forming. So as I say, I wouldn't be buying the NASDAQ, but when I couple it with that head and shoulders formation on the S&P, I wonder if these markets are going to try and rally into the first quarter. But it's still a defensive game. It's about being selective with any longs that you consider. I'm only considering stocks which are above the moving averages and which have upward momentum, using risk management, having those cash reserves. But as I say, just not getting boxed into the market has to fall, because you just never know. The market can find multiple pathways to get to where it's going, and maybe the market is bearish later in the year, but it mightn't be straight away. Keep an open mind, follow the price action.
Absolutely. Some people say to us on the show, react, don't predict, these sorts of things. But let's get to the local index now, because clearly, at least from a structural point of view, looking much more positive on the charts. Now, we are seeing a bit of softness coming through the market today, although those jobs numbers seems to have given us a bit of a sentiment boost. What are you seeing here when it comes to the technicals, however? Are you constructive on the ASX 200?
Yeah, Carl, I think the ASX 200 continues to trade well. It's above the moving averages, so I've got the 50 and the 100-day moving averages on this chart. And you can see that just over the last couple of weeks, this rebounded off those moving averages. So for me, that's a sign there's buy the dip going on, there's accumulation. And that's quite different to what we saw during much of last year, where it was sell the rally. And we're now seeing that flip, and people interested in buying those pullbacks. So the next level to watch on this chart is that triple top resistance, that blue band you can see at the top of the chart. But that's at 7,000, just above 7,600, and that's also the all-time high for the ASX 200. I think the overall structure is positive. My hesitation with buying the ASX 200 here is that it really is getting close to that big resistance area. So I'm just not sure whether this would be an asymmetric type of entry point. I'm more interested in looking at the individual stocks and looking for the setups there, because I'm seeing some really interesting setups in the individual stocks, and I've got one to show a little bit later on. And just while we're on the local market, just have a quick look at the small ordinaries. Got a chart of the small ords which is worth looking at, because what we see here, it's bouncing off support. So you can see that blue shaded area at the lower portion of the graph. That was support at 2,800. healthy bounce off that, above the moving averages. The moving averages are crossing and turning higher. It's heading towards resistance around 3,100. That's that blue band to the top. So the path of least resistance at the moment seems to be the upside. I think it's encouraging the dips are being bought, and it also looks like we could have a large basing type of structure. So I think the small to mid caps, I think they're really looking like an interesting section of the ASX.
Yeah, interesting. And it's sort of like it's filtering down through the larger caps to obviously the smaller companies, that kind of positive sentiment. So we'll see if it can last. But let's go to a commodity now, gold. And well, one that has certainly launched off its lows of the back end of last year. Obviously, this is a monetary policy story, but how are you seeing things when it comes to the gold price? Clearly, if we do talk just pure momentum, well, short-term momentum is to the upside.
Yeah, I thought we should have a quick look at gold because we've spoken about it a bit over the last few months. We had that breakout from the channel, the trend channel, that downward trend channel back in November. And then in December, we had the moving averages crossing and turning higher. And the price has been rising steadily since. So it's been interesting. It's just a great example where you can use technical analysis to get these clues of potential changes in a situation with those two things I mentioned, the channel and the moving averages. And they're things that we spoke about. So you could see that we had this potential setting up. Ultimately, I think gold can go a lot higher over the next, maybe this year, next year, the year after. I think it's got a great medium to longer term technical setup when you step back and look at weekly and monthly charts. But just bringing this back to the near term, I think at some point we really need to see this rally get checked and some sort of consolidation. It is getting quite stretched above those moving averages. I thought we may have seen a pause in the momentum before now. But it's continued to go, so it is showing a lot of underlying strength. But I'm also cautious about buying gold after it's had a big run. So for me, it's a case of holding what I've got, selectively adding when the opportunities present, and just being careful not to get carried away after a big move, because you can get those sharp pullbacks. But overall, looking really good. I also like Aussie gold. Didn't bring a chart of Aussie gold today, but we spoke about that in early December, talking about how it was in a range and looked like it was getting ready to break out. It's now broken out. It's now running as well. So all good on gold. And just while we're on the metals, I thought we should have a quick look at copper, because that's also been on the move in the few weeks since we caught up. And really interesting price action since that. Oh, look, I think we last chatted in late December. And at the time we were talking about how copper was coiling up above those moving averages. And it looked like it was getting ready to have a run at that resistance zone at $4, which you can see that blue shaded area. And it's done that. It's had that run. It's broken through. So that's given that copper now looks like we have a strong basing formation in place, and we're getting that momentum coming through. It's above those moving averages. Moving averages are trending higher. Just like gold, it probably needs to pause and consolidate that recent run, but I think it looks good. And those ETFs we've spoken about in the past, COPX listed in the US and WIRE listed on the ASX, I think remain good ways to play the copper story for your investor who doesn't want to pick the individual stocks. Happy to go with an ETF broad-based approach.
Okay, so get exposure to copper potentially that way. Of course, a big China thematic there as well. Now, we've got about 4 minutes left, so we want to get through platinum too, which is one that actually we don't follow too much here on the trade, or it doesn't get brought to the table, I should say, quite as frequently. But glad that you have. What are you seeing here when it comes to the platinum chart?
Yeah, I just thought this was interesting because this is an example of the sort of buy signal which I've been seeing quite a bit of in the last couple of weeks. It all wraps into that potential for a positive start into 2023. And so platinum's an interesting one. It's had a terrible time over the last couple of years, down about 70%. So this is probably why a lot of people don't want to talk about it, because it hasn't been much to talk about. And put on a weekly chart, it's even worse. But the recent price action's encouraging. So what I want to do, I want to zoom in on that area in the bottom right-hand corner of the chart where I've got some lines and stuff drawn. So I need to flip to another chart for that so we can get a better look at it, because it was so compressed, because I wanted to show that more longer term view. just looking at this is interesting, just old school technical analysis combined with momentum. So we've got that classic rounding basing formation. You can see that cup shape beneath the price action. And the rounding base is interesting because you see where the momentum, the downward momentum starts to round out and the selling dries up. The stock then starts to gradually turn higher as the accumulation takes over. And next you get the breakout. So I've got two breakouts on this. Firstly I've got the green trend line, which is one way you can look for a breakout where it just maps out the top, the two previous highs, looking for a break above the trend line. Or I've also got the technical resistance band, which came in around $1.90. They come in around a similar level and they give the same effect. You're looking for an upward break of momentum, which we saw in platinum a couple of weeks ago. The moving averages across, again, the 50 and 100 days. We might get a pause in this in the share price over the next few weeks because it has had a strong initial run, but the underlying structure's interesting in that you're looking for stocks which are starting to get momentum to the top side rather than that are falling and trying to pick them on the way down. And as I say, I'm seeing more and more setups like this. So the markets are really in an interesting situation. It's not a clear-cut buy the market, buy everything moment, but there are pockets which are starting to appear more frequently. So fascinating time to be looking at charts with you, Kyle. And yeah, look, I think we should have some more interesting stuff in the next few weeks as we continue to go on.
Yes, well, I'm sure 2023 will be just as interesting and thrilling as 2022 was, at least when it comes to chatting with you, Jason. We've got, we're at the top of the show, so we'll have to wrap it up there. Really appreciate your insights. Once again, Jason McIntosh from Motion Trader. Talk to you soon.
Kyle, great to be back. Great to talk again. And yeah, catch you in a couple of weeks.
Brilliant. Okay, well, that does it for this edition of The Trade. Be sure to tune in tomorrow. We'll be back with more trading action. Thanks for watching.
The Trade is brought to you by ACY Securities, Tim Cahill's official FX and CFD trading partner.